Welcome back. In today's video, we're going to be exploring where the money is being made, what is going on in the rest of the crypto and traditional finance ecosystem, as we've been focusing a lot on these Bitcoin treasury companies and Bitcoin itself, but there's a lot of other things going on which could indicate where we are in this cycle as ASTER token hits a new all-time record high, as these perpetual DEXs gain a lot of traction in the crypto ecosystem. And in today's video, we're going to be exploring what's going on with ASTER and hyper liquidation. We're also going to be talking about all of the Bitcoin mining companies that have pivoted to AI, like TeraWulf, Bitfarms, Cipher Mining, CleanSpark, and more. But we're going to be starting right here with what is happening with Avalanche. Because if you guys watch my videos on a regular basis, you know that just a few weeks ago, the beginning of September 2025, I posted this video called Avalanche Crypto is a Buy. And in that video, we talked about Toyota that is working on the Avalanche blockchain, yes, the car company. And now we're hearing about more integrations and more partnerships with the Avalanche ecosystem. Meanwhile, the Avalanche crypto has really underperformed from what a lot of investors thought would be, an altcoin cycle. But as I've explained for the last couple of years now, is the altcoin season that many people expect from the previous cycles is just not what we're seeing. I mean, this is from January of 2024, and you can see Avalanche has done 2 round trips, but we're seeing diminishing returns, lower lows and lower highs. But meanwhile, there's a lot of partnerships going on, and we're going to start the video right here. We're going to be talking about other cryptos as well, like Chainlink, ASTER, Hyperliquid. We're also going to talk about some of the stable coins as well. So this video is pretty much everything besides Bitcoin and everything besides Ethereum. So make sure you guys are subscribed. We upload every single day on this channel to bring you the latest happening in the financial world. Sometimes we do deep dives into individual cryptos or assets to invest in. And sometimes we talk about the general zoomed out macro view to understand where we should be investing, how we should be investing, and where the market is going. Nothing I say is financial advice. Give the video a thumbs up. Let's get into it, starting with Avalanche. So we now see Avalanche posting on X that Avalanche is adding $316 billion giant to its institutional ecosystem. Mirae Asset Global Investments, one of Asia's largest asset managers, signed a memorandum of understanding with Ava Labs at KBW to pioneer fund tokenization and on-chain fund operations. And we know tokenization and securitization of assets and money and things like that is big right now. And I think that we're going to see more and more of this as time goes on, and this will potentially put us into the next cycle of this tokenization world where everything is going on chain. The initiative focuses on 3 areas: fund tokenization research, which is fractional ownership, accessibility, and settlement. Second is institutional integration with Avalanche's partner network. And 3 is pilot projects like on-chain portfolio management systems. And so this could be really big. Obviously, right now, it's just a memorandum of understanding or MOU. And this means that they're going to be kind of exploring where this all goes. But like I said, Avalanche as an ecosystem definitely seems to have a lot of value. It seems like a lot of possibilities in terms of the technology and what the technology can actually do. But from a price perspective, it's just not where many of us expected it to be. And we also have to keep in mind that the circulating supply right now is about half, a little bit more than half, about 60% of the maximum supply. So there's definitely going to still be dilution going on in this crypto. But potentially this is a buy in the bear market, as companies specifically in Asia are looking to utilize Avalanche and are already utilizing it in certain circumstances, like we covered in this other video about Toyota. And so I would definitely maybe even recommend watching this from over a year ago, Exploring Avalanche, where we did a deep dive into AVAX to understand, is it a good or bad investment? And I think at this point, as we rotate into a bear market, it is a really good opportunity to take a step back, look at some of these, high market cap cryptos, see what they're doing, and then potentially make an investment in it. Maybe not now, but maybe in the bear market. That brings us to Tether and the stable coins. Because, guys, remember, the stable coins, they make money, right? And We know Circle IPO'd, potentially Tether is going to IPO, because now we're hearing that crypto giant Tether is seeking funding, about $20 billion in exchange for 3%, which would put the company's valuation at $500 billion. And so exactly does this mean? Well, this user on X said, ask yourself why Tether may need $20 billion of cash via new equity when it's worth $500 billion. It earns 99% net margin. It earned $4.9 billion last quarter alone, investing their deposits for themselves. And it has $172 billion in dollar reserves. It refuses an audit, and it claims there's no need for an IPO, which would require an audit. Now, let's be clear. Number one, I don't think that them trying to raise money is because they need it. I think they're doing it for strategic partnerships. And Paulo Adorno, who's the chief executive officer at Tether, he said Tether is evaluating a raise from a selected group of high-profile key investors to maximize the scale of the company's strategy across all existing and new business lines, like stablecoins, distribution ubiquity, don't even know what that means, AI, commodity trading, energy, communications, and media by several orders of magnitude. Tether, the stable company. And so I think that they're doing it for strategic partnerships, right? Because a company or investors or individuals, they may, they want a piece of the pie if they're going to help Tether do what they do and expand. But there is definitely a question here about, the audit. Now, Tether says that they do audits. It may not be to, SEC guidelines or that kind of level, but they do audits. And Tether's not a U.S.-based company, so they don't really need to comply with U.S.-based, audit requirements. And they're not a publicly traded company, so they don't have to do that either. But I remind you that Tether has been sued multiple times by the likes of like New York, and New York ended up settling with them, not proving that they did anything wrong. They had to pay a small fine, and they weren't able to operate in New York. And to me, that was kind of like an indicator, like if New York had something, they probably would have pushed further. But it seems like Tether is okay for now. But it's something definitely to think about. Like, why would they need $20 billion of cash? But I don't think that they actually need the money. And you guys also have to remember, as interest rates come down, these stablecoin issuers, they make less money because they make money on your deposits. And so if the interest rate is lower, naturally, they're going to make less money, right? And that brings us to Circle. Circle is exploring reversible USDC transactions in a break from the crypto ethos. Now, we talked about this briefly in another video, but effectively, they're going to be able to reverse transactions they already freeze money in hacks or thefts that occur within their stablecoin ecosystem. And this is one of the reasons that we, on this channel at least, we like centralized stablecoins, because they create safety in an unsafe crypto ecosystem, right? Where you know that your money is safe, whether it's with Tether or with USDC for the most part. But we also have to keep in mind, Circle has a massive unlock from their IPO that's happening in December. And this unlock is going to unlock all of the shares from early investors, allowing them to sell their shares on the open market. This, alongside the Federal Reserve beginning to cut interest rates, in my view, these stablecoin providers are going to go through, I think, a corrective phase. Because again, a stable coin is a stable coin, right? You can't invest in a stable coin, but you can invest in the company, whether it's Tether or Circle. And I think that trade is kind of over for now as well. But as we're going to be talking about in just a few minutes, there's a lot of opportunity to make money here, because you even hear from Paulo Adorno that they're looking to get into AI. And by the way, there's other news about Circle expanding their operations to create rails for payments between AI agents. So very interesting stuff over there. Meanwhile, we've also covered Chainlink pretty extensively on this channel. I think that the recent the recent partnership or collaboration with the government in the United States between Sergey, the founder of Chainlink, and now seeing the integrations of Chainlink being kind of more highly integrated with TradFi, traditional finance, to bring off-chain data on-chain and on-chain data off-chain. It's really going to be the connector for all of these ecosystems. You have the Chainlink cross-chain interoperability protocol, or transfer protocol, CCTP. And they also have started a reserve, and they continue to gain more and more of their own coin in the reserve. And part of the reason that they're doing this is, number one, to show confidence that this is worth something. But number two, so that as time goes on, Chainlink can be self-sustained ecosystem where they have money that they can do things with if they need to, especially for expansion. And so this, the Chainlink Reserve is designed to support long-term growth and sustainability of Chainlink network by accumulating the Chainlink coin using off-chain revenue from large enterprises adopting Chainlink and on-chain revenue from service usage. And so the more that we see getting put into the Chainlink Reserve, the more clear it should be that large enterprises are adopting Chainlink. Don't tell anybody that, but they are. And again, these networks make money from the fees from processing transactions. So even if the fees are extremely low, which on many chains they are, especially compared to like TradFi, like bank to bank, they have all this infrastructure, all these employees, all these and it's all centralized. And so it costs a lot of money. And we're starting to see the transition away from that. And so if we do see TradFi utilizing the blockchain and utilizing Chainlink to connect their off-chain traditional finance servers and data with on-chain data, that's going to significantly increase the usage of these blockchains. More usage means more volume. More volume means more fees. More fees mean more revenue. More revenue, more reserve, more ability to expand. And from a valuation of the network perspective, what do you think is going to happen? These ecosystems like Chainlink, they are going to be the new stocks. They're going to be the new JP Morgan stocks. Because remember, JP Morgan, the bank, is worth something like $500 billion, and they don't do anything. You don't get anything as a customer from them. They take your money, suck as much as they can out of it by, then rehypothecating the money that you're giving to them by providing loans and stuff like that. And they give you 0.01% interest. So you get nothing from them except more fees and maybe even getting debanked, as we saw happening with a lot of political people over the last couple of years. And now they've turned and they're like, no, we're now fully in this DeFi ecosystem. And we're seeing that happening from the SEC to the CFTC to the banks that are capitulating to the usage of blockchains. And so, JP Morgan has their own blockchain. And so that doesn't mean they're not going to use Chainlink or other interoperability features to connect to the blockchains outside of their own. They are, but they have their own blockchain to kind of make sure their data and their money is safe and centralized. But that, like I said, that doesn't mean that it's not going to connect with Chainlink, because I think there's a lot happening behind the scenes. And I think that the fact that Chainlink keeps expanding their reserve, you can see since they effectively made their announcement about their Chainlink reserve, they've already increased it from 0 to 371,000 coins, or $7.6 million in just about a month and a half, 2 months. In my view, that's pretty big. And they're letting us know, clearly there's a lot more going on. Let's look at their cross-chain explorer. You can see all these different networks are coded in. And again, this also kind of tells you where you should not be investing, because there's cryptocurrencies here that have been around, guys, for years. And they're in the top 25, and they have no connectivity to Chainlink. They have no connectivity to Circle's USDC. They have no connectivity to Tether. Think about that. Cryptos in the top 20, top 50, top 100 that have no interoperability with this ecosystem that is connecting to the banks. Now, people are going to say, but Cryptoviser, we don't want centralized parties like the banks involved. Well, then your coin's going to zero, and F your coin, right? Because that's really what it comes down to. Like, if you guys don't want it in your coin's ecosystem, great. It won't be in your coin's ecosystem. But that makes your coin uninvestable. And so who is investing in your coin? It's not the banks. It's not Wall Street. It's not smart money. It's not analysts like myself. It's you. You're the one investing. And as time goes on, these protocols that are not interconnected, they're going to go to zero over time. I mean, even ApeCoin, guys, right? We have coins in the top 50 that are not interoperable. ApeCoin is. So ApeCoin is better than your coin. ApeCoin is connected to TradFi. Your coin is not. But you're so bullish in your coin, right? It makes no sense, right? And again, I'm not here to convince you of anything. I'm just letting you know as an analyst, those coins are uninvestable. And even if they flip and get the interoperability at this point, it may be too late. It really may be too late. Because a new blockchain that pops up, like we're about to talk about with ASTER and Hyperliquid, they're literally doing things that chains that have been around for years, not even, it's not even that they haven't done it. They don't want to do it. And they haven't even began the path to get there, right? We have ecosystems that are blaming Chainlink and saying, well, Sergi wants a lot of money to get integrated. And it's like, okay, so you're telling me ApeCoin can get integrated with Chainlink, but your coin cannot. Multiple cycles later. And you're bullish on that coin? It makes absolutely no sense. It's actually negative in the making sense meter, right? It's like negative IQ. How can you have negative IQ? Well, your intelligence is so bad. You're not even intelligent, right? Anyway, I don't get it. I personally don't get it. And again, your money is what you do with your money. So if you want to invest in something, you're free to do that. I really try to understand how you can see ApeCoin here and say, oh yeah, but my coin is better, when it has no interoperability. I mean, Chainlink is connected to the banks. So the banks and ApeCoin can connect, but other coins in the top 50 have none of that. So we're at that point in the cycle where we're really looking at things and saying, like, even WorldCoin, guys. Chainlink posted this saying WorldCoin, co-founded by Sam Altman, has made its WorldCoin a cross-chain token, enabling it to be natively transferred across Ethereum and WorldChain by its 35 million users, powered by Chainlink's interoperability protocol. World also adopted Chainlink data streams to power DeFi markets with high-quality sub-second data on WorldChain. And so all of these ecosystems that I'm like, this is a shitcoin, right? This is who wants to get their eyeballs scanned by an orb that called WorldCoin when there's no real explanation on what it does, right? What it's going to do. But they're integrated with CCIP, with the banks. I mean, is Chainlink an investable asset? I think so. Maybe not right now, because we are, at the end of 2025, kind of end stages of the bull market. But as we go into the depths of the bear market, there's definitely going to be opportunities. But how are we going to get to the bear market? Well, we have to reach the peak in the bull market, which may have already occurred. Maybe it's going to occur sometime in the future. But these are some indicators here. ASTER token hit a new all-time high amid layer 1 plans with it's probably about $2 billion locked on the platform. ASTER, the new DEX from Binance, processed more than double the trading volume of Hyperliquid. Now, you guys know how I feel about Hyperliquid. I mean, I believe Hyperliquid is actually hyperliquidation, right? Liquidation, liquidate your position, because all these leveraged DEXs, That's what happens, right? What was FTX? I mean, it was a leveraged DEX, effectively. Well, it was a leveraged centralized exchange, but you guys kind of get the point, right? What were they doing with their whole ecosystem? They were playing the markets. As we covered, Internet Computer Protocol had a failed launch from a price perspective. It went from $700 down to $2. And a lot of that was due to FTX and Alameda counter trading without even touching the coin through perpetual futures contracts. And we showed this in many different coins. You could look at Litecoin, Cardano, and ICP. In 2020 into 2022, they did FTX, the largest crypto exchange in the world, did not have Litecoin listed, did not have Cardano listed, and did not have I don't even remember what I was just talking about, the other coin that we were just talking about, ICP, there we go. They didn't have any of those coins listed, but they did have perpetuals listed for it. And perpetual futures is just trading without touching the coin itself. So you're manipulating the underlying asset through derivative products. And so now they're launching, again, end stages of the bull market, end of 2025, they're launching ASTER, and it's competing with Hyperliquid. And so everybody who's invested in Hyperliquid, now they're getting liquidated because now they have to share the market cap and all of that liquidity that was in Hyperliquid only. Now they have to share with ASTER. And so because ASTER is the next big thing, a lot is moving out of Hyperliquid and it's moving into ASTER. So let's pull up the Hyperliquid chart and then we'll compare it with the ASTER chart. So as you guys can see here, we'll pull up the 1 month chart. You can see that Hyperliquid kind of was down. This is the 1 month chart because remember, ASTER launched in September. So ASTER launched in the middle of September and you can see it went straight up. Hyperliquid from the middle of September, it was like the 17th, I think. Yeah, right here. The top for Hyperliquid was right here. This was the day ASTER launched. And what has happened to Hyperliquid since? Straight down. It went from $60 down to $40, which is a 30%, 35% drop. Why did that happen? I mean, even on the 1 year chart, that marked the top of the market. And people are like, no, it's not the top of the market. Guys, even Arthur Hayes sold his Hyperliquid. Because not only do we have this, but we also have early investor unlocks coming very, very soon. And so those early investors who invested a year or two ago in Hyperliquid, I mean, it's already up 1,300% on the 1 year. So you don't think the insiders are going to sell? Of course they're going to sell. But the other thing is, ASTER is pulling liquidity from Hyperliquid because people are like, okay, I made money on Hyperliquid. Now I got to make money on ASTER. And so effectively, Hyperliquid will never reach those highs again this cycle. It can't happen because of ASTER. But when we look at the fundamentals of what these ecosystems do, they're just perpetual DEXs. And these perpetual futures contracts are very negative. If you just trade on perpetual futures, it's not a big deal. But when the market is pinpoint focused on these perp DEXs, like they were at the end stages in 2021 into 2022, I mean, almost every single day, we were seeing Sam showing like, oh, here's a trade I made on the perpetual DEX that they had. And I didn't even know what perpetual futures were at the time. But once we hit the bear market and we started to see all of the manipulation in the markets that was occurring, a lot of it was coming from perpetual DEXs or perpetual futures contracts. I shouldn't say DEXs because they weren't all DEXs. And now Coinbase, they have perpetuals. Binance, they have perpetuals. We have all of these perpetual DEXs that people are using to trade. And so I'm not as concerned about the price of these because they're not going to maintain these high valuations, right? I mean, they may right now because people are trading them. But once the market collapses and people stop trading crypto at the frequency they are in the top of the bull market, these prices are going to drop. And people are going to realize that by utilizing the perpetual DEXs, they helped accelerate the decline of all of cryptos. Because what are they doing? They're trading the cryptos without actually touching or trading the cryptos. Think about that. They're trading the crypto without actually trading the crypto. So they're making side bets, but people think that it's a real bet, but it's a side bet on the coin without touching the coin. And unfortunately, these derivative products should derive their value from the actual coin. Like, for instance, in the last cycle, Litecoin did not hit its all-time record high. Well, it did hit its all-time record high, and then it came straight back down. Internet computer came straight back down. Cardano hit $3 straight back down. And a lot of that was because of the perpetual futures contracts that were manipulating the underlying asset without actually owning or touching those coins. And how do we know that? Well, those coins performed Cardano did a 100x, but a lot of people thought it was going to go much higher. Litecoin barely hit its all-time high and then came down. Internet computer, it was manipulated literally from $700 down to $2. And FTX, the world's largest crypto exchange, according to Sam, didn't even list these coins. Litecoin was it still is one of the most highly regulated coins, like regulatorily approved almost everywhere in the world. FTX didn't list it, but they had it listed in their perpetual contract. So pay attention, because these are indicators of where we are in the cycle and where the cycle is going to go and how the cycle is going to be brought down, because we're already seeing it. I don't think Hyperliquid's ever going to hit the $60 price again, at least in this cycle, because ASTER is now competition. And so now they have to share the wealth with ASTER. And because ASTER is new, a lot of people are going to be moving their money here and trading here, and the leverage is much higher here. And more leverage means more liquidations. More liquidations mean more crashes in the price. More crashes mean we're closer to the bottom of the market. And again, you don't believe me, but hyper liquidation. There you go. But like I always say, there's money to be made in these markets. And I believe, and I have been saying all year, all 2025, and even we were talking about this in 2024, but not as much in the AI space, but all of these Bitcoin mining companies that have pivoted to AI, they're going to do very well. Very, very well. There's companies that didn't make the pivot to AI, or they made it too late, aka Marathon Digital. And what is going to happen with the price of Marathon? Well, if you look at the price of Marathon Digital from a stock price perspective, right? We're basically flat on the 1-year chart, right? But if you compare this to Riot Platforms is up 125% on the year. Let's compare this to CleanSpark. CleanSpark is up 30% on the year. Marathon is down on the year. Let's add Iris Energy. Iris Energy is up 350% 1-year chart. Let's even just do year to date. Year to date, Marathon is down and every other asset is up. You can see it right down here, green, 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 Marathon, red. Why is that? Because Riot made a pivot to AI, CleanSpark made a pivot to AI, Iris Energy made a pivot to AI, TeraWulf made a pivot to AI, Bitfarms made a pivot to AI, Marathon Digital didn't. Now people are going to say, no, but Cryptoviser, they did. But they did too late. You can't pivot in the middle of 2025 and expect all of their operations to just instantly be able to flip the switch to AI. That's not how it works. They have to build out the infrastructure. They have to buy the servers. They have to prove their concept to companies and market their product to companies. This takes months or years. And that's why Marathon is behind. And it will continue to be behind because they did it too late. While the other companies like CleanSpark secured a second Bitcoin-backed credit line without share dilution. So CleanSpark got a $100 million credit facility with 2 Prime, boosting their total borrowing capacity to $400 million, fueling data center and hash rate expansion plans. Now, I don't know why they would try to expand their mining operations, because we're at the end stages of the bull market, but the data centers and AI, money is going to be flowing in. And it's not because they're creating AI. They don't really care. They're just creating the infrastructure for AI. You need the energy? We got the energy. You need the server rack space? We got the server rack space. There's a very high demand for infrastructure for AI, and there's a very low supply. And so if they can take advantage of that right now, they can make a premium. Now, that's not going to last necessarily forever, but for now, they're making a premium. And it's not just CleanSpark, TeraWulf as well. We've covered TeraWulf. TeraWulf is eyeing $3 billion in funding with support from Google. They're expanding data centers, and it showcases how Bitcoin miners are evolving into crucial AI hosting providers with major tech backings. Remember, Google obtained a 14% stake in TeraWulf just at the end of 2025. That means they bought 14% of the shares of the company, and that means that they're backstopping TeraWulf. Google is providing $3.2 billion in financial backstop for TeraWulf's debt financing. The partnership includes a 10-year hosting agreement for over 200 megawatts of liquid-cooled capacity focused on AI. And again, if we look at the TeraWulf stock, $2 all the way up to $12 effectively. Okay, and that was just in April, $2 in April. So from April until October, we went up 400%. And I don't think it's over. I think it's going to continue to go up, especially as there's more funding that gets pumped into these AI companies to expand their operations. But it's not just them. Cipher Mining prices $1.1 billion upsized convertible note offering. Proceeds are intended to support their Barber Lake, another HPC expansion build out, and capped call transactions to reduce share dilution. So they're trying different things. They're getting into the derivative space as well. I don't necessarily agree with that, but the bottom line is the AI pivot was the correct thing for many of these companies. And you can see that they're doing very well. Cipher Mining also, they signed an agreement with Google. FluidStack. Cipher Mining signs a 10-year AI hosting agreement with FluidStack, and Google backstops $1.4 billion of FluidStack's obligations and received 5.4% equity stake in Cipher Mining. So Google is now with TeraWulf, Cipher Mining, and probably CleanSpark in the near future. And you're not bullish? And then we have Bitfarms, which is a Canadian-based company that has pivoted to the United States. Their CEO just said that they're going to be fully domiciled, or the company is going to be fully in the United States by the middle of 2026. Right now, they're a Canadian-based company. But once they move to the US, done deal. And I think that, in my view and opinion, I believe that they are in some type of they're getting ready for some type of massive growth and expansion, and definitely going to get some probably big partnerships in the near future. And this is a highly, highly undervalued stock when you compare it to the likes of these other, like Marathon Digital, $6 billion valuation, TeraWulf, $4.5 billion valuation, Cipher Mining, $4.6 billion valuation, Iris Energy, $12 or $11 billion valuation. And look how much it's up already. I mean, Iris Energy is up 600% approximately, just since the middle of the year. And so this is the banana zone. And I think that even though we may have a bit of a correction in AI and definitely a correction in crypto, there is still money to be made here. And you have to think about what is going to grow at a faster rate. Is it going to be Tesla? Is it going to be NVIDIA? Is it going to be the Bitcoin mining companies that are moving to AI? Or is it going to be a crypto? In my view, it's the AI plays. Let me know what you guys think down below about everything we talked about today. Chainlink, the stable coins, Avalanche, Aster, hyper liquidation, and all of these Bitcoin mining companies that are now some of the biggest AI plays in the world. Are you invested in them? Which ones? And which ones do you think are highly undervalued? Let me know down below in the comments, and I'll see you on the next video. As always, crypto on.